I want to talk about liquidity pools today. This is something that we touched on, I think, back in April. So it's been a while. And in light of the recent move in Bitcoin and really across crypto assets here, got more trading volume. There's more to talk about. And when you look at some of the decentralized exchanges, you're seeing volume pick up there. A lot of fees are being generated. And so I want to talk about how this works and maybe more importantly, go through a demo, show you guys how to set this up, how to use Uniswap, because very soon you're going to be able to do this with the tastycrypto wallet. We've been working on this connection for a long time. So we've got to upload this to the app stores. But once that's out, you'll be able to connect your wallet and really start to interact with all these applications that are on chain. And this is the one that I'm personally the most excited about. So I want to talk about it with you guys today.
All right, beautiful. I'm all into learning as much as I can about liquidity pools. You know, Ryan, I believe that one of the most important things in the future of what I think is modern finance, strategic finance, is going to be the concept of liquidity pools. It's something, you know, with our own exchange that we are really focused on building around our liquidity pools.
Absolutely. And we talk about this often as being decentralized. I don't necessarily know if that's the best word when you think about what this is or who might provide these services. I tend to think about it more as just disintermediated, or you remove a lot of the intermediation that exists today. It doesn't mean that it completely goes away, but you as an individual have a lot more access as a result. So that's what's kind of cool about this. Really quickly, though, I got a question for you. Did you guys end up getting into the futures pairs trade that we talked about? And then how did that work out?
Well, we messed up because so the answer is yes, we got into it, but no, we got into it, yes, but we messed it up because we did the wrong ratio. I thought the micro ETH was, I thought that mini ETH was 5 coins. And then when I did it, I didn't realize it was 50. I mean, I realized it was 50 coins when I'm looking at my P&L and going, how can ETH, which hasn't moved, be down as much as
the P&L, yeah, the money.
My P&L was off by 10x. And I'm looking at it going, okay, there's a mistake here. So internally, you know, we just made a mistake. So I don't trade very often.
It's really silly that the products go from, 50 coins to basically, a tenth of a coin. I mean, it's stupid.
Yeah, I mean, 50 coins is the 50 coins is the mini size, and 1/10 of 1 coin is the micro size. There's no logic to that at all.
Yeah.
No, it makes no sense.
That's why you gave the 19-to-1 ratio. But at the time when we're doing the show, we're like, we're just, I wasn't going to do, 100 micros when the market's like 10 deep. You know what I'm saying?
Right.
Right. So absolutely.
So the whole thing got screwed up.
Okay. Well, with the bigger ones, I think it's 2-to-1. It's a little bit more straightforward. If we're correct in that it's 50.
No, it's exactly 2-to-1.
The Ethereum side.
You're right. Yeah. It's 2-to-1. But let's just understand, 2-to-1 is a big trade. 2-to-1 is you're trading
huge.
$180,000 of notional on both sides.
Yeah. And then on the other side, you got a tiny $300 trade with your micros.
Nothing in between. Right, exactly.
One other thing I'll point out, I'm not sure if you guys have been trading it at all, but while the ETH Bitcoin spread has traded a little bit lower here, Solana versus Bitcoin has ripped about 40%. So there's been a trade there. We'll see if it continues to run or not, but that's another one to kind of call out. But I think you're in some Solana, right, Tom?
I'm just long Solana. I don't have I have no pairs trade, nothing else. I'm long Polkadot, Solana, and Cardano ADA. So those are 3 of my longs, but I don't trade them. It's like I say, I like to talk about it. Those are very passive, very static investments that I just consider dead money, but they're just sitting there.
Got it. Well, there has been a lot of, I would say, trading opportunities here recently. I mean, you saw Bitcoin swing within $1,000 range a couple times intraday yesterday, at least during the U.S. equity session. So we've had a lot more volatility. That's resulted in a lot more fees that are generated on decentralized exchanges. And I want to just jump into that right now. We've got a couple of slides here that we can skip over. Probably the first one, just a little bit of crypto market awareness. We have seen implied vol pick up, and it's really important, again, as we talk about on Tasty Trade or Tasty Live quite often, when you focus on that volatility, just to understand what this means. With a 60 vol on Bitcoin, we're looking at really twice the size of the expected move on a weekly basis that we saw just a month ago. So there's a lot more opportunity, in my opinion, when we look at the volatility that's come back into the market. But when we talk about liquidity pools, and if we could just jump to, I think, slide 3, we've got a couple bullet points, some background before we get into the demo. But when we talk about liquidity pools, it's important to understand that these liquidity pools and this activity, what I'm going to go through here in this demo, this is what facilitates decentralized exchanges. This is how they operate, how they work. And so before we jump into that, just a couple quick bullet points on what a decentralized exchange is. This is an exchange that simply runs on a blockchain. There's no intermediary, there's no central counterparty, there's no broker, it's just code. And to access this, which I'll show you, you connect your wallet and then boom, you're able to go. You don't need to ask for permission. You don't need an account necessarily. At least here today, that's how it works. So it's permissionless, and that's what we mean when we say that. And you don't really have a central limit order book, at least not at this stage. It works a bit differently as this is facilitated by these liquidity pools, where you have the concept of what's called an automated market maker that just matches the orders. Anyone can provide liquidity to the exchange as well. And so that's really how it works. And the incentive to do so is that you receive the fee that the decentralized exchange charges the trader, the end user. So if I want to transact, just like with most brokerage services, I might pay a small fee or a small commission. Instead of that going to a central company, that's going to go to those that are providing liquidity. And that's the economic incentive to provide liquidity or to participate in this way. So
this is, in my opinion, versions of this, not exactly fully permissionless, not exactly everything done through a wallet, but conceptually replacing the allowing anyone to provide liquidity and essentially creating an automated market maker and allowing anyone to provide liquidity. And whether or not it resides on a blockchain or a listed exchange, whatever it is, I think that the concept of liquidity pools is going to be the future of market making. There's no reason that Ryan Grace or Tony Batista can't be on the other side of everything. That is a true transparent marketplace.
Wow.
Yeah, I'm super excited about it.
Yeah, I mean, this is what our objective is, building a new exchange right now. And this is what the objective should be for everybody in, for the torch carriers like you in the world of finance for the next couple of decades. This is what you're going to grow. This is the concept that's going to grow into something that changes everything from sports betting to event betting to listed markets. I mean, seriously, why do we need the New York Stock Exchange, to basically rake the pot every single time? Why can't you rake the pot? You know what I'm saying? Like, why do we need that? Before we needed it.
Why not me?
No. Well, before you needed it because there wasn't any place that there was no way to do it.
Right. Otherwise, you're on a street corner. I get it.
Right. But now you can actually do it through technology. And it's just a matter of time. That's why, I understand the role of the exchanges and all this kind of stuff. But when people go to me like, where's the biggest risk in the world of finance? I think it's to a certain extent, it's some of the exchange technology, which I think is very dated and is not keeping up with, with what the future of, like, that's why when the SEC and Gensler and all these people are ripping on, or trying to basically shut down, digital assets and blockchain, well, I shouldn't say blockchain technology, but digital assets and trading and that kind of stuff. I don't think they understand the long-term implications of the technology that everybody's building right now. The technologists are building to solve global problems like shortages of commodities, shortages of, capital, all these other things. But traders think of it very differently. I think of it really differently. And I think it basically disrupts the whole exchange, market structure, and allows you full transparency to do whatever it is you want to do on any side of any marketplace. Eventually.
Yeah, I mean, I would say that today, and it's still nascent technology, theoretically, the technology exists today that could disrupt or will disrupt the multi-trillion dollar industry of financial intermediation. I mean, it just removes the need for that in the process. It's more of a natural evolution through technology, in the same way that things became more efficient as the internet evolved, and still is. And so I think we're at the beginning of that, and that's what's really interesting about this, because it's a mechanism for introducing liquidity to any tokenized asset. We look at it today in the form of tokens that are on Ethereum and more from a speculative perspective, but this is a way for anything to almost become liquid if it's in tokenized form, or it to be exchanged, which again then leads to that liquidity. Why don't we just, as we're running out of time, why don't we just jump right into this, because I want to show everybody what this looks like.
Ryan, we own the network. You can do whatever you want.
Wow, he's giving you.
Well,
wow. Pulling that card up.
Well, this is just this is a demo that I can be a bit long-winded, as you guys might, so it can go long. I'll try to speed through this, but I appreciate it, Tom. We could, I can go over today. Beth won't yell at me, but I want to just, if I can share my screen here, John, I think, do I just have to click share screen? I think that's how this works. Apologies.
Yes.
All right.
We got you.
Here we go. So you should be able to see this for the most part. So this is Uniswap. This is what I'm talking about when we talk about decentralized exchange. There are others, but this is really the biggest application today. It accounts for 50 to 60% of the trading volume that settles on chain on Ethereum. And a lot of this activity, the majority of it is on Ethereum. So that said, in order to access this, you simply go to the Uniswap website. Within the tastycrypto application, you'll be able to automatically connect to Uniswap. We'll have interfaces that allow you to do this as well. But when you connect to this application, all you're doing is signing a transaction with your wallet. So you're kind of like logging in with your wallet in a way. That's the Web3 concept on chain. And I've already done that here. So you can see in the upper right corner, my Ethereum wallet is connected. Indicated by the name there. And so what we've got here is the swap interface. So this is what it looks like if I have tokens in a wallet and I want to swap them for something else. You can see the current balance in the wallet that's established as soon as you connect. And then anything that is going to be traded on this exchange, or anything really that exists as a token on the Ethereum blockchain or others, is available to exchange. So if I wanted to trade ETH and sell it for USDC, which is going to be a dollar stable coin, I could do that. I could trade ETH into wrapped Bitcoin, which is just going to be synthetic Bitcoin, or a derivative in a sense, where it just represents Bitcoin, but it's on the Ethereum blockchain. So you can trade all sorts of different token pairs.
Let me stop you for a second. So all these is just like a classic pairs trade of just Bitcoin, ETH, right?
Yes, in the sense that you are, selling your existing position and then you're buying something else. You're not necessarily taking a short position in one asset and a long position in the other.
You're selling one and buying the other, but you could easily just go back if it goes the way you think it's going to go, and then get out of the same exact trade and end up what you had originally.
Exactly. Unfortunately, or maybe just because it's so early, no one's really built that interface out yet. The concept that we're talking about, where you find opportunities for pairs trades with these different tokens, that I haven't seen, at least, a great interface for that. It doesn't exist where you can just easily get into that. So I would love to see that. And I think you would see more trading activity at times as well. But that's what this would enable you to do. Just by connecting your wallet.
Yeah, that's a lack of.
I want to get into something else.
That's a lack of know-how. So there's a disconnect between the trader community and the digital asset community. like, I've actually talked to Edward about this and building the functionality. Like I think the digital asset community is still, when it comes to trading, they're still living in the dark ages. So in other words, the technology is super cool, but the trade logic isn't there yet.
Yeah, but hopefully we can help to change that. So this is the trading interface. I want to show you the pools piece of this because sometimes people just don't believe me that this is real. But I have a pool that I set up, and I created this 9 days ago. And so this is a pretty good representation of just what happens when you get a little bit more trading activity. And by no means is this a significant amount on a historical basis. I mean, we've seen trading just kind of come back, really. It's not like it's at all-time highs or anything when you look at what's going on Uniswap. But I have a pool here that I've clicked into, and I just want to walk through what we're looking at. And I can show you quickly how to set this up as well. But I'm providing just under $10,000 in capital or liquidity for this pair, USDC, Ethereum. This is just Ethereum priced in dollars. So I'm providing liquidity for anybody that wants to buy or sell Ethereum against USDC. And this rate is what the pool charges for that trade. You can think of that as the commission. And that's what goes back to me in the form of a fee for providing that liquidity. That's the yield that you're generating. And you're generating that on the notional value of every transaction. So there are some very large institutional sized transactions, and I would say a majority early on of the transactions on Uniswap, very, very big. And at that point in time,
slow down. So you put up $10,000 of liquidity. Is that right?
Yes, that's correct.
So you put up $10,000 of liquidity, and you're telling me that you're generating a $255 fee on $10,000 of liquidity?
Yes, in 9 days.
So you were filled on the $10,000 of liquidity.
Yes, you're more so just saying if the price is within this range and people want to either buy or sell one of the two assets, I will contribute to making that happen. It's all aggregated into a larger pool, but I have in the form of an NFT, a receipt or a liquidity provider token that says this amount goes to this address based on its contribution to the pool.
Yeah, but aren't you taking principal risk that you have basis risk that you could end up with, your position could be flip-flopped?
Absolutely. And so let me show you here as we scroll down, because this is the pool. This is the current makeup of the pool. So you start with 50% of each asset. You can see here that I have more USDC. So what that indicates to me right away is that the price of Ethereum has been going up because people are coming to the exchange, they're buying Ethereum, taking it out of the pool, putting USDC in. So my pool's not perfectly balanced. It's 75-25, as you can see. And those fees are paid out in both of the underlying tokens. So you have volatility, or you have risk, I suppose. You also have opportunity when one of those fees are going to be paid in Ethereum. And so you can see the makeup of that $255 is 127 USDC and then 0.06 ETH. So we could see this fluctuate a little bit. But this is the range that I'm providing liquidity within. And this is really like a strangle, right? This is participating here is essentially just a short vol trade. We want to see high volume, but we want to see volatility within a range, I suppose. And so to talk about the risk really quickly, I'm providing liquidity between 1675 on the downside. You can think of that almost as a short put. And I'm providing liquidity up to 1876 on the upside. You can think of that as a short call in a sense. As long as the price trades within there, I'm providing liquidity and I'm going to receive a portion of the fees on the orders that are filled within that range. And it's going to just simply be relative to how much capital I've committed to that. And so we can see the underlying price there. Now, if this goes all the way up and it goes above what we could consider that short call strike, 1876, my pool becomes 100% USDC because I'm selling out of the Ethereum at higher and higher prices until I no longer have any Ethereum. I would have to unstake my pool. I would have to then swap the dollars to get back to 50-50 and create a new pool in order to participate again. Or for this to kind of turn back on or to activate again, the price would have to fall back within that range. And then it automatically is going to start providing liquidity again. But above 1876, it's 100% USDC. The principal risk also exists on the downside, where if you consider that the short put strike of 1675, my pool is 100% Ethereum at that price point. And I might be okay with that. And maybe I don't go back into providing liquidity because I think it's going to bounce, whatever it might be. But in the event that Ethereum goes all the way to zero, that's my risk. I lose whatever the value is of the pool at 100% Ethereum at 1675. And the upside risk too is the opportunity cost.
It's an absolute. I think they made this so complicated because it could be just so easy. The difference is the fee structure is ginormous. So that's going to come down like tenfold, like because, but it's not like, you are taking, you're basically just leaving a resting order in here to sell out your ETH or to buy more ETH. That's all it is. Again, when you're doing it against US dollar, but you can determine what you want to do it against, right? If you want to do it against Bitcoin, then it's just a pairs trade.
Yeah, you can go in here and you can actually calculate what those 24-hour yields are going to be. You can see the liquidity or the size of the different pools. I'm in ETH USDC because it's the biggest, it's the most liquid, it's the most active. But if you wanted to be or had the size to be 10, 20% of a pool that's much more volatile, you can do that and you would generate all of the fees, right? If I had all of the liquidity in this pool, however much that is, a few $100 million, I'd be generating whatever those fees are on a 24-hour basis. And in some cases, that's over $1 million a day. Uniswap is the first decentralized exchange and first decentralized.
But you're still taking tons and tons of principal risk.
You are.
Yeah.
So you do have to have, you have to have a view, I think, in some cases that you're bullish on the underlying asset if you're trading USDC versus ETH. But in an environment where, you see these things you could provide liquidity across the whole range and it kind of trades sideways, there's a pretty decent yield that's generated here. I agree with you that it'll come down over time, but this 255 on 9798 is it's in less than 2 weeks. And it's passive. I just look at it once in a while, and if I have to rebalance, I rebalance.
Yeah, if you have to rebalance, rebalance. But yeah, it's
how safe is the money in the account?
It's safe. It's safe, Tony. There's no,
I'm just asking. I mean, that's going to be the other thing, right? I mean,
well, if you're worried about that, then you wouldn't own digital assets to start with.
Well, I'm saying the transaction.
Well, I mean,
the party risk.
Things can be hacked. There's no, I don't think that, there's no real counterparty risk where Uniswap is on the other side of this, but as a early stage technology, this has been around since 2018. It's on the third version. The fourth version has been proposed. A lot of interesting and positive changes there. The contracts are auditable. It's open source, but to your point, Tony, or to just the reality is that it hasn't been hacked. I'm not sitting here and putting all the money that I have. So there's not 15,000 in here. There's only 9,000. So, that's kind of the way that I look at it. But I think this is something where as a strategy or just something when you think about diversification, I want a little bit in this to take advantage of where those yields are right now, because they are going to come down. There's going to be a margin of compression as more people participate and it becomes more efficient.
This is a pairs trade. This is just pure pairs trade. Mm-hmm. And it's a pure pairs trade, but instead of when you do a pairs trade in our world, the commissions on a $10,000 pairs trade are $2. When you do a pairs trade in this world, if you're the one who's initiating the trade, the commissions are more like a 25 basis points. Okay. But the difference is in the liquidity pool world, you can be on the other side. That's what Ryan's doing. Sure. So so the counterparty, instead of being Citadel, is Ryan Grace.
Sure.
And so he's taking that 25 basis points and hoping that what he gets enough two-sided trade back and forth that his principal in the end doesn't really change, and he just keeps that huge fee.
Understood.
Listen, I'm going to be clear about this. I freaking love it. And Ryan, everything you did is on tastycrypto.
It will be very, very soon. You'll have the ability to do this. We've
But
been
you were
working
showing it
hard
on the
connection, and
you were showing it on the platform.
I'm showing it just through my web browser. Yeah, that's not through the mobile app. But everything I'm showing you, be able to do exactly that. You just would click a button in your tastycrypto browser extension and you connect. So it's not so much, our platform is helping to provide the access. And then what we're looking at there is the front end for Uniswap on its website. We're like the web browser.
Yeah. So this is the first stage of where technology is going to go for a long time going forward, and for the next couple of decades. Ryan, this is you're on the edge. You're on the new frontier. And hopefully when we combine this with the new small exchange project that we're doing, this is going to make, right now I think a lot of people are confused. In 4 or 5 months, I don't think anybody's going to be confused. I think people are going to really understand this, and we're going to do our part to change the world with respect to this, because I am a big believer that this is the next generation.
Very good, sir. You want to take a quick 90-second break? Good job out of you, Ryan.
Thanks, Ryan.
Hey, thanks, guys.
We'll take a quick 90-second break. We'll come back. We got more Tasty Live and a market measure after this. Even the S&P is up 41.